Good afternoon, this is Giuseppe Basile. I'm the analyst and trader you can find at the blog FibonacciStalking.com. I also post regularly on Twitter using the Fibstalker nickname. Good afternoon. Today is Saturday the 17th, 2012, and it's 5 p.m. Italian time. This video is part of my newsletter, free newsletter, and it's titled Fibstalker View on Currencies. I'm going to review the dollar index for you, plus for forex pairs, and I usually accompany this video to my newsletter. If you want to receive this video on Sunday, you can subscribe to my newsletter. Go on my website and subscribe on the left side. Otherwise, I typically publish this video 6 days later on Saturday. Let's start with the dollar index. What you see on the screen is the weekly chart of the DX continuous contract aligned to the December expiration. I want to show you a couple of things. First of all, I want to show you the resistance we had in mid of 2012, and this is the 83.90 level. As you can see, this 83.90 level is a target, first target in 71.20 area. So there is where we expect in 2013 and 2014 the euro dollar to be. This could be a very quick affair. In the last during this year, in April and again in September, the dollar index had support, and you will remember we identified this support with this retrace. Support is at 79.20, and it respected this support in February and in March, and again in September. So this is the reason why we had this inversion here. However, at the moment we also have another resistance in the dollar, and maybe its move higher will stop here. It was a swift move higher, so the price is not going to invert on a dime, just in a day, but it's going to be a slow process that could take maybe another 3 to 10 days. Let's move to the daily chart. On the daily chart, this resistance it's clear, and again, I do not expect price to go much higher here, but the move lower could be very slow. Actually, there is also this 20-day moving average. The very beginning is going to offer resistance, at least at the first test. So don't expect price to keep going lower briefly here and swiftly, but this is going to be a long process. Let's move into the pound versus the US dollar, and as you will remember, the pound has resistances, and they are in these areas, so 168 to 165, and this resistance is keeping price lower, but recently you will see that we started respecting a long here. So there is support in 153.60 area, and this is going to push price higher. As we can see, if we get additional dollar weakness, the first target for this market is definitely 172. Moving to the daily, you will remember last week we had a setup here that was retested multiple times but never failed. The 61.80 was never failed on the upside, and price got to the first target 158.90. There is a second target here, and last week I say that we could reach that target, but the euro found support on Wednesday, and probably the pound found support as well. And my working assumption will be for the next weeks to consider 158.50 area the support level. This support level could be retested again, likewise in the euro, but it has a first target in 165.20. Let's move into the Aussie dollar versus the US dollar, and this market is in a huge bull flag. So as we get additional dollar index weakness, we could actually break this symmetric triangle, this wedge here on the upside, and we have a target in 117.80 area. As you can see, we have support in the 95.70 area, and that's also a long setup. Moving to the daily, last week you will remember we had the violation of this measure move lower, and price initially respected this level in 103.80, and it came down twice, then respected it again, but then eventually broke out. And last week we indicated two potential support level. The first one was the next measured move. As we see, we traded this to target, and then we were waiting for the next measured move to trade, and that was 103.60 into 105.37. However, I also have indicated another setup, which was the low to highs trace, and the reason we could respect this setup is because we had broken the measured move lower. So that's typical. When we break a trend, we come back to the halfway back, and then we start a new trend. So it's possible, it's very possible the new trend is started. We could get some sort of retest of this 103.10 area, which has a target in 105.60 area. And the reason why we could get a retest is because we expect weakness at the beginning of the week, but then strength at the end of the week in the dollar and the beginning of next week. So maybe we won't get back to 103.10, so this is a good entry level with a stop below the 102.70 area, 70 area. The target is in 105.60. Going to the Canadian, the US dollar versus the Canadian dollar. You remember that we also say that this pair is in a wedge at lows, so it's flagging, it's bear flagging here, and we have resistance in this area, the 105.70 area. We also identified last week a resistance level, and that was traced from this high to the recent lows, and that was located in the 100.40 area. Okay, and that's better visible on the daily chart. On the daily chart, we have this resistance level here. This resistance level here, 100.40, and you will remember that I identified this trace. It was the lows to highs, the next measure move, but I say that we might not get into the 100.80 area, and the reason was the fact that there was this resistance area located in 100.40. So now that we start getting weakness in the dollar, we should see this the price of this pair keep moving lower. So this is a very good entry area. I don't think this is going to be retested. but we will get some sort of retest next week. Maybe we will go below this 20-day moving average and retest it from the downside. I would not consider this measured move anymore, but probably what I would do, I would wait for the 61 level here, 0.9940 level to break, and then trade the next measure move lower, like this, based on where we get the low. So that's the way I would actually trade this, and maybe this setup will correspond to the 20-day moving average, but we cannot count on this. And finally, the weekly chart of the US dollar versus the Japanese yen, and we have to be very careful with this chart because the yen is showing much more weaknesses when compared to the dollar. So this is a very dangerous pair at the moment. It's not very technical as well. We need to understand whether the yen is going to be weaker than the dollar, and as we know, the dollar is probably going to start extended move lower. So last week going on the daily chart, last week you will remember that I indicated this resistance level. It was respected the week before, and I said from this behavior it looks like the Japanese yen is going to be stronger than the dollar, and the dollar is going to go down. But besides the strength in the US dollar we had during the week, we can see that the weakness in the Japanese yen was comparatively higher. So this is why we had this huge push higher. So what the Japanese dollar, the US dollar versus Japanese yen is trading was this measure move here, and probably it's this one. It's much better. The US dollar Japanese yen is not as technical as other instruments like the US dollar, or the euro dollar, or the pound, so we can expect this kind of things, and I think it's a little bit dangerous at the moment. But as we can see, the 79.05 traded to target, and still defended the measure move lower. This is a very strong pair, so I wouldn't, even if we get US dollar weakness, I wouldn't trust it. So at the moment it seems it's going higher, and the next measured move is, if we trade technicals, is going to be the it's going to be the AUDUSD, and that's the next support level for this pair. But I would stay away, and I want to understand what was going to happen with the dollar first before we can trade this. Good. I hope this is useful. This is my Fibstalker view on currencies. I'm going to publish this tomorrow along with my other articles in newsletter. If you want to receive this information, just subscribe my newsletter. Go on FibonacciStalking.com. On the left side there is a picture. You can click and subscribe. Thank you very much. Have a great weekend, and I look forward to see you on the blog. Thank you for your attention, and bye bye.